Hey, it's that time for another monthly market report. This is where we look at all deals that have closed over 10 units, conventional, student housing, and affordable for the northern half of Florida. We're going to talk about the historical sales that just happened and maybe have some predictions for the future. Stick around. Let's go! For those of you that have not watched one of our market reports in the past, my team goes to every single tax assessor website for all the counties we cover in the northern half of Florida. We export every sale of every deal over 10 units, conventional, student, and affordable housing. We look at them to make sure they're qualified sales. We verify the prices. We then put them in all kinds of Excel columns for $1 a unit, $1 a bed, gross rent multiples, $1 per square foot, you name it, it's on there. And then we look at sort of what's happened over the last couple of months, some of the trends, trailing 12 months, and maybe make a couple predictions. Let's jump into the spreadsheet. To show the markets we cover graphically, if you go to Beery.com and scroll down to the page, these are all the counties incorporated, which is basically Polk County, all of northern Florida. As you can see, this covers 2,022 apartment complexes over 10 units. They're owned by under 1,000 people, companies, REITs in the world. Only 888 of the 2,022 are over 100 units and owned by only 409 ownerships in the world. Almost all of them are US born or US based, if you will, the investors are. And these are the top 5 states of the investors and where they're based. Now, I will say the first thing to note is that in the trailing 5 years, there are roughly 145 to 155 closings per year for all of those counties over 10 units, and that's conventional, student, and affordable housing combined. The most sales that have ever occurred in the history of the world for those markets was 206 sales, which happened in 2021 because everyone was trying to get in sales in the fourth quarter, thinking that capital gains tax rates may go up in 2022, which never happened. So, in a normal year, about 12 to 15 sales per month happen in the entire northern half of Florida. This market report is covering through September because I'm in the month of October and all the sales don't hit most tax assessor websites for another 30 to 45 days after the month. The thing to note here is that for the month of September, only 5 sales have occurred in all those markets for all of September. And they were all market rate sales, no student housing, and no affordable housing. This tab includes the name of the apartment complex, address, the ranking, what type of asset it is, date it closed, the build age, the price, number of units, number of bedrooms, monthly rent at closing time, total square footage per unit, dollar per square foot, and the gross rent multiple. Now, on this spreadsheet, all the stats you see towards the bottom here are for market rate only, even though student and affordable is above it. We have told our equations to only pull out the market equations. We cover student and affordable housing separately. So for the year of 2022, there have been 50 market rate sales over 100 units, average age of 1979. We're running a 1.74 bedroom to unit ratio, $156,000 a unit median sale price with a $1,350 a month in-place rent and a 9.92 gross rent multiple. And you can see the stats for under 100 units. We're now running much higher number of sales under 100 units, where historically they're about even. A little bit older age, we got $99,000 a unit median sale price with an $850 rent, and the gross rent multiples are almost the same. Now remember, gross rent multiples is the sale price divided by the total annual rent. It says how many times more the annual rent an investor will pay in price for that same dollar. The under 100 unit world has really come up on gross rent multiples. For several years, it was in the 7.5 to 8.5 range, and now it's well over 9. My prediction is even in these higher interest rates, those gross rent multiples for under 100 units should hold pretty strong, because while interest rates affect all assets proportionally, as a dollar amount effect on the smaller deals, it's not as big of a deal. So we're already seeing a flight to buying smaller assets than bigger assets. That doesn't mean the bigger guys are buying more smaller assets. It just means there's going to be more trades of the smaller assets. Hence the 66 sales versus 50 so far this year. Now we will jump down to the trailing 12-month stats. On these spreadsheets, I track all the 100-unit sales for the trailing 12 months, and these are all market rate sales in blue and white. Student is tracked separately, affordable separately, and then these are all the 10 to 99 unit sales for the trailing 12 months, market rate through here, student and affordable. The way this reads, all classes would be the summation of Class A, B, and C all together. Class A is almost all new construction. I have Class B showing all Class B sales and then further breaking down the B's right here. So the 11, 24, and 13 adds up to the 48. Same thing for Class C. The first thing to point out in stats is if you look at the overall 100 plus units market rate trailing 12 sales is $153,000 a unit. Now, if you'll remember up above, the 2022 sales of market rate 100 plus was $156,000 a unit, which means that the prices have gone up in 2022 because this amount is incorporating some of 2021 and the prices are lower for trailing 12. On the under 100 units, it's still $99,000 a unit, which means that the under 100 unit price ranges have been staying about the same in 2022 versus trailing 12 months. However, what's interesting here is that the trailing 12 months gross rent multiple is at 10.4, and up above for 2022 sales, we were in the 9s, which means that investors are paying less on the price per dollar of rent than the trailing 12 months. So we're paying less for the same dollar of rent as time goes on because of the interest rate hikes, but because rents have climbed so much, it has actually increased the price per unit. The same goes for under 100 units. The gross rent multiple was slightly more for trailing 12 months than it is in 2022, which again means investors is paying less for the same dollar rent as they were. This further proves my point that I've been saying all along. Will that last forever? You bring on another 1.25% increase in interest rates by the end of the year as predicted. I'm not sure rents will buoy that out. So I think dollar a unit could become very stable or go down slightly over the next 6 months. Okay, some more high points. Class A, which is almost all new construction, as you can see the average year right here, is nearly $300,000 a unit. Now keep in mind, this is taking the trailing 12 months. I can tell you now that almost every new construction sale that closes today is over $300,000 a unit by a pretty good margin. Those new construction sales are bringing in nearly $2,000 a month on the rent and trading at over a 13 gross rent multiple and over $300 a square foot. In the under 10 unit world, there are no new construction sales. I've mentioned this in previous videos, but the reason why is because you can't buy land in Florida today at today's land values and build at today's construction costs and only build a 50 or 60 unit complex. You have to build 200, 300 unit complexes to make sense. So the existing inventory under 100 units continues to get older and older, and not enough new product can come on because of the cost. Another thing to point out is you can tell there are 89 sales over 100 units on the market rate side for trailing 12 months, which is more than the under 100 units. Now remember, up above, under 100 units had more sales than over 100 units in 2022, which means there has been a significant shift to buying smaller assets over the last 3 to 5 5 months due primarily to interest rate hikes and the fact that gross rent multiples and dollar a unit for under 100 units have been climbing, so more folks are selling to take advantage. Another interesting thing to point out is this is the percentage number of sales of the overall for market rate. So 18% of sales over 100 units market rate are Class A, 54% are Class B, and 28% are Class C. If you look at under 100 units, it's a totally different story. No Class A sales, a little more than half the number of Class B sales as over 100 units. And then on Class C, there are more than double more Class C sales under 100 units than there are over 100 units. And again, that's because under 100 unit deals continue to get older and older, and if they're not value added, they become more likely to be C than B. Okay, staying with 100 plus units, the overall Class B sale is going for $164,000 a unit, $1,350 a month rents, nearly an 11 gross rent multiple. Here are the further breakdowns. As you can see, B plus is all the way in the $231 a door for a B plus, which is what Class A new construction used to go for not even a year ago. And then on the Class C assets, the overall Class C is going for $98,000 a unit, which is primarily made up of C plus kind of assets. Now, 100 plus unit deals make more sense to continuously value add. So there's not as many Class C sales as there are Class B sales because they're constantly being remodeled and updated. In the under 100 unit world, you can see you're running about $130,000 a unit. So a good $34,000 a unit less than the larger assets for overall Class B. And that number is primarily made up of B minus assets. These two numbers here are too small to take any inferences from. So most B minus deals or any B deal that occurs under 100 units is usually a B minus because again, these are older assets and they're running about $126 a door for $930 a month rents and a 10.5 gross rent multiple. But 2/3 of deals under 100 units are Class C, running $92,000 a unit, primarily in the C plus and C range. Just so you know, a C minus when I'm doing the ranking is a pretty bad asset. Very bad location, difficult demographics, high crime, lots of value add needed. There's just not that many of those kinds of sales that occur. To tackle student housing over 100 units, only one sale a month occurring, which is primarily University of Florida, FSU, with a little bit of Jacksonville colleges that exist, and one or two in the Daytona Beach area. Those are trading roughly at $49,000 per bedroom. That's usually how those are valued. And looks like between a 3 and 4 bedroom unit is normal versus 1.7 overall in the market rate world. $1,739 a month rents for the unit, not the bed. I track those separately. And only a 7 gross rent multiple on those right now, which tells me not a whole lot of major Class A or B plus student housing has traded this year, or this would be a much higher multiple. On the under 100 unit range for student housing sales, there've only been 6 sales, so not a whole lot of great data here to rely upon, but you can take a look at it. On the affordable housing sales, there were 15 all year so far at $137,000 a unit with an $1,100 a month median rent, trading at almost a 10.5 gross rent multiple for affordable housing. Okay, now I'm going to show you a couple really cool charts that show sales going back to 2015 and showing each year comparing. A couple of really interesting facts to take notice on. And then we'll end the video on what I'm seeing right now in the marketplace. These are for the over 100 unit stats, market rate only by year. In the year 2015, there were 45 sales at only $60,000 per unit and a 6.32 gross rent multiple. So gross rent multiples, or the amount investors are paying for the same dollar of rent, has increased almost 50% in the last 7 years. You can see each year here, and you can tell through this year so far, we're now at $156,000 a unit, which is $21,000 a unit more than last year. But the gross rent multiple is coming down a little bit, so investors are paying less per dollar in rent. which is to say that prices have already come down, just not the dollar per unit yet. Because rents have gone up so much, it's balancing out the interest rate increases. As you can tell, in 2021, it was by far the most number of sales of over 100 units that have ever happened, even going well past 2015. And so we will definitely not be on pace with that with the remainder few months in 2022. Same thing on the under 100 units. 2021 was almost the biggest year. 2018 was actually the biggest year. And we should end up beating last year's high and possibly 2018's high, since we still have 3 months left in the year. I'm going to move on to predictions now. You can pause this screen and study it further if you'd like. Okay, so what's happening in the market right now today? Absolutely nothing. It is a complete halt to all sales, particularly over 75 units. There's been a dramatic slowdown in the number of BOVs that I've done as a broker. And the reason is very simple. You all probably know this. Owners of these assets, particularly over 75 units, are earning the highest rents they've ever earned in their lives. And they know it doesn't make sense to come to market at this time when they have to be priced with today's interest rates. What I believe will happen is that over time, their price expectations won't necessarily go up. They'll stay the same. And then as their rents increase, it will then justify selling at the price they want, even incorporating in today's interest rates. Now, there are, of course, several instances in which larger apartment owners will make sense to sell right now, and we can attack those different instances in a different video. But in general, more time has to pass for rents to continue to increase to now justify today's owner to sell at the prices they want, given today's interest rates. What I am seeing is more number of sales under 50 units that are occurring as a result of the interest rate hikes. There are many investors who were hybrid investors, folks that can buy 100 and 150 unit complexes, but have a platform which also allows them to buy 20, 30, 40 unit deals, particularly ones that are near the larger complexes they already own and can manage out of those. We also ran a study recently in just the Gainesville market to prove our point, to see what under 10 unit sales were doing, which are duplexes, triplexes, quadruplexes, eightplexes, and determined that there are 5.1 times the number of sales of those assets than the ones over 10 units. And their prices have skyrocketed. So my advice to those apartment owners that buy larger apartment complexes over 60, 70 units, you still have to stay vigilant. You have to keep trying to buy those assets. You have to keep networking with all the brokers who procure them. You have to keep underwriting them, because if you just stand back and take a pause, then you have zero chance of acquiring others. I would also tell those same investors to consider buying some of the smaller assets in the meantime. If you bought 3 or 4 40, 50 unit complexes over the next year as this period is slower, I promise you on the back end, you will be very happy you did. For those of you that have bought in the 10 to 60 unit range, I would take serious consideration at looking at some of the smaller assets under 10 units if your equity and debt is set up that way. There's a whole world going on under 10 units that is pretty fascinating with how many transactions are happening, particularly when you can buy up in subdivisions and gain control of those subdivisions and HOAs over time. We are seeing prices of even not so great neighborhoods going from traditionally $30,000 and $40,000 a unit to selling at $100,000 to $120,000 a unit in just the last few years. All right, I hope this month's update was useful. I'll see you guys on the next one. Let me know if there's anything else you'd like to see on future market reports. See you guys later.